There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice. Brought to you by TackleTrading.com.
Hello, friends, and welcome out to the Trading Justice podcast. This is Tim Justice, one of your hosts, and we're back and excited to be here today. We've got a very special guest and looking forward to talking to him. His name is Brad May. He's a trader. Real smart guy. Actually, I saw a lot of his work. He developed this really cool spreadsheet on trading earnings. He's a specialist when it comes down to assessing volatility and the earnings expectation and that kind of thing. You know, trading options is one of those animals that, it can be as complex as you want it to be. And for people who try to simplify that, they usually develop systems. And I'm excited to interview Brad and talk to Brad and get down to business with that. We also got Phil. Phil, how are you doing today?
We're doing all right over here in Salt Lake City on this fine July afternoon. Got all of the YouTube videos for the Trading Justice podcast up and linked up all pretty so that was a nice project to get finished. So if you are out there and prefer to check out podcasts through YouTube, you now can do that for every episode of the Trading Justice podcast. Shameless plug.
Absolutely, and no shame there. If you're proud of what we're doing, we should definitely plug it at every chance we can. But let me ask you, Phil, where can people find us? I mean, we've got a lot of different ways to download our content. What are all the different avenues that they can find us in?
Well, there are several that they can go to. The main one is iTunes. You can also find us over at tradingjustice.com and on YouTube by typing in Trading Justice. We are also available on the streaming services of Stitcher and TuneIn.
Wonderful. You know, and if you're a fan of the Trading Justice podcast and you do listen to us through iTunes, we do love reviews, especially if they're positive reviews. If you can throw in a snide comment about Matt, I always appreciate that myself personally.
Everybody appreciates him.
That's right. Without further ado, guys, let's bring in Brad May. Brad, why don't you tell everybody a little bit about yourself, your background, kind of who you are, and how you got into all this business.
All right. Sounds good. Yeah, I'm Brad, and basically how I got into it was, about 3 years ago, I got married to my wife, and her dad actually showed me Rich Dad, Poor Dad. So it's pretty cliche, but I feel like that's half of the people that you have on the podcast is what they'll say is Rich Dad, Poor Dad. But that's kind of how I got started reading that book and had that paradigm shift in thinking. And then I actually got introduced by a friend to a company called Primerica. It's kind of one of those multi-level marketing things, which I failed at, but learned from and found out that I was interested in investments from that, and then went to trading from that because we moved out to BYU, Idaho, actually, to go to school. My wife and I both graduated from there, and I took one of the 3-day courses, the Rich Dad courses. That's kind of how I started out. It took, I think, 3 of the classes, Master Trader, Cash Flow, and Spread Options to begin with, and then, kind of went from there. But
very interesting. So a couple things. First of all, there's a lot there that I want to talk about. Number one, the Rich Dad, Poor Dad philosophy and mindset shift. You use that phrase, mindset shift. And I can't think of a better way to describe it. Whether it's Robert Kiyosaki or Tony Robbins or you name it, Jim Francis or Matt Justice or whoever, if you allow yourself to learn from somebody who has a different perspective than you, that's an entrepreneur and has built businesses and attacked the world in a different way, I think that you've got a chance to do something really, really great. So when you read that book, your father-in-law, he gives you that book. And he says, Brad, you're going to marry my daughter. You're not going to be a 9-to-5er your whole life. Here's a book. How did you feel? Did you feel grateful? Did you feel like, oh, man, this guy must think I'm a bum? Or what was your reaction to it?
more grateful than anything. He's a doctor, so he works a lot, but he's also had some experience trading in options, and that's kind of how I got introduced to it a little bit, actually. So it's kind of cool to talk to him about it because nobody else in my family knows what I'm talking about when I talk about stocks or options or anything.
Mm-hmm. Mm-hmm. What does he trade? What kind of option strategies?
He used to, but because he's a doctor, he has trouble sticking with it because he's got his full-time thing. But I know he's done spreads and different stuff like that in the past, and yeah.
Got it. Interesting. Well, and the mindset shift part of it, I guess. How would you describe that to somebody who doesn't understand rich dad philosophy, going from a consumer to a business owner to an investor? If you had to, like on Reddit, they say, explain it like I'm 5. Like if you had to explain that to somebody like they were 5, how would you describe that mindset shift and the importance of it?
Honestly, the thing that sticks out to me the most from reading those books was on a very basic level, there's more than enough money to go around in the world. You just have to know how to get yours. And whether that be by businesses, real estate, trading, whatever it is, you're trading your time for money if you have a 9-to-5 job. Whereas with trading and different things like that, you can make your money work for you, which is a lot better.
Mm-hmm. Mm-hmm. Got it. Interesting. And then when you finally got enrolled in the classes, did you end up taking those classes live or online? What was your experience there?
No, online, the recordings. But yeah, I enjoyed them. I learned a lot from them, and it just kind of made me realize that I needed a mentor to kind of help me along with the process.
Yeah. The thing about any of those courses online, we're moving into a world where think about how we absorb content. It's pretty much over the internet or a Wi-Fi connection, even through our TV. A lot of instructional stuff happens through YouTube or webinars or you name it. I know that recently I've had to become educated in a few areas, and I'm sitting there watching videos. But the key is that you always need that person in real life at some point to talk to on the phone and say, hey, I understand the basics of this, but what do you think about these nuances, right? And that's where mentoring, but also community comes in. And you're a pretty active member of the tackle trading community. What do you think of the forums over there, and also the ability to pick the coach's brains and all that kind of stuff?
Yeah, I love that. I could be more active, but I have been doing some stuff lately. I don't know if you saw my research on the TRIN and the VIX that I've been posting lately. It seems like a lot of people like that, but it is good to kind of be able to have your ideas kind of critiqued by other traders who are doing the same thing as you, definitely.
Yeah, I did see that research, and you brought it up, so we might as well talk about it now. I mean, you went back and looked at the Traders Index, the ARMS Index, and the Volatility Index, and you did what I love doing, and you did some back testing. Even the most rudimentary back testing, in my opinion, can help us understand something better. And the more we understand something, the more confidently we're going to trade something. What was the motivation behind that research, and then what were your conclusions?
Motivation was curiosity, because I always hear from you guys and everybody else about the trend closing above 2 and kind of how it means we're going to have a short-term reversal. So I just wanted to look at the evidence for myself and found out that it actually is pretty legit. I think it was basically like a 60 to 70% chance that the markets will bounce up the next day after a close of the above 2 or so. And the higher the trend closes, typically the better results you'll get, is what I figured out.
Yeah, exactly. And the thing about the Traders Index, you're looking for extremes, but it does bring up I think a broad point, is that guys, if you're going to use a tool in your trading, make sure you understand what that tool is. So often a new trader is so inundated with information, you kind of just go with what the book says, or you go with what your mentor says, and so it's not uncommon for me to pull up somebody's charts and say, Oh, you've got the 20, the 50, the 200, stochastic, MACD, RSI, and the ATR on there. Okay, well, you must be a student of ours. But then you ask him, well, what are you using that tool for? Because every inch of real estate and every amount of time you spend should be valuable, and it is valuable. And so you should be very cautious about what you're looking at on a daily basis. The Trader's Index is a very valuable indicator, looking for extremes and reversal points. I would encourage everybody, if you haven't seen it yet, go and check out Brad's research. It's called Trend Index. It's in the clubhouse at Tackle Trading. You're already getting some good feedback from that. I think people were pretty appreciative. Some of the community I saw pop in there. I thought it was really cool. It's really cool. It reminded me of a time, a long time ago, where I was in a class and I was teaching a class on indicators. And I had a trader come to me and say, hey, Tim, I was going to buy that on a breakout, but the stochastic is over 80. And I stopped and I said, well, so what? He says, well, my book says don't buy over 80. He says, okay, but have you seen that to be a reason not to play a swing trade? He says, well, my book says. I said, okay, I've got some news for you. And I made him go back and do the actual research of what the 1, 3, 7, and 21-day projections are after a stochastic hit 80 or above in an uptrend. And it blew his mind. He came back about 3 days later and he says, oh, Tim, I didn't understand this indicator at all until I started really running the numbers. And so even though backtesting can be intimidating out there, guys, I think you should take Brad's lead and some of my guidance here and consider, if you're going to use a tool, really dig into it so you understand it. The VIX as well, good indicator. What other tools do you use on your charts, Brad, to help you make decisions?
I'll look at implied volatility a lot. Like on all of my charts, I have it in the top left corner what the IV percentile is, so I kind of know if it's over undervalued at the time that I'm trading whatever I'm doing. But I also use the TTM squeeze just because I like it as kind of a reversion to the mean indicator for me. But I use that, and then the 8 and 21 EMAs, probably my biggest EMAs that I'll pay attention to. But other than that, I don't bog it down with a whole lot of crap,
Well, and that's interesting. I tell people, at first you got to go naked, streak through the quad like Will Ferrell in Old School. You have to be able to read a chart without any tools on it. You don't want to develop your charting skills with all of these different gadgets and tools, because then you're going to use them as a crutch and you're going to become dependent on them. The simpler the better. It's actually a really good exercise I do with any new students, Brad, is I'll take down all of their crap off their chart and I'll say, okay, now read it. Tell me what you see. And it's a good indicator of whether or not they actually can find the price action trend, volume pattern, that kind of stuff. Phil, you're sitting here listening in, and you've gotten to know a lot of our students. You've been a part of our tackle trading community for a while now as a producer and a pretty integral part. I also noticed you've been writing some articles over there recently. First of all, very good stuff. I liked it. What are you picking up from as you're listening to Brad talk about his journey, and in terms of what advice you might think other people could grab from that?
Well, he's the mentoring and community really are the big ones that I had in my journey as an entrepreneur, and that really does carry forward to just a little modeling here. It does carry over to life as well. You can measure yourself, and people can measure you by the people you know and do business with and the like. And you having a great network, having a good support is critical. Fifth Street Games, my previous company, would not have gotten off the ground if I hadn't had a support network to help me work through some of the problems, keep my spirits up when things got rough, give me ideas, shoot down terrible ideas, and it makes a difference. And if you can manage to find a mentor and not drive them away by being, hey, I have a question, hey, like that don't be that person. It's a relationship, not a transactional put in a coin, get a glib piece of advice. and you'll make yourself better, you'll make them better, because that's what it's about, is working like a team.
Yeah, I agree with that so much. It is a relationship. I have mentored a lot of people in trading and life and in business, but I've also had a lot of mentors. And I got to tell you, the mentors that stayed with me and helped me the most, I I did my best to treat them with respect, their time and their space as well. I think that's very important. It's just like anything in life. I mean, you gotta have the basic things we learn on the playground, right? How to interact with people. But but even that being said, I would hesitate a little bit, and I would give everybody counsel out there. You can't go the extreme the other way either. If you don't ever ask for help, you're going to be left wondering, where's my network? You kind of have to put yourself out there a little bit at times, and I think that's really, really important. In fact, the reason we're having this conversation, Brad, he had developed, a spreadsheet and done some research, and he put it out there to the team and said, hey guys, this could be something you might be interested in. And all of the mentors and coaches were like, whoa, that's really cool. And so we wanted to talk to Brad a little bit. Brad, let's transition to that for a minute, because you love to trade earnings, right? And you love to trade volatility. And tell us a little bit about your journey into that area of trading. How did you arrive there? Why is that your specialty? And kind of explain that.
Okay. Yeah. So after I took the 3-day class, there was actually 4 other guys in there that we would all get together on a weekly basis, and that was kind of my community to start with. And one of the guys was a business owner, and I had actually just lost my job, and went to him asking if he had any positions or anything. And he was like, well, I don't know, but I'll call you back. And then he called me back, and he was like, how about we try this trading thing and start a business out of it? So honestly, it didn't go very far. Basically, what ended up happening was he was paying me to virtual trade and update him on the markets, which was cool with me because I got to sit there for a year and watch the markets every day as a job. And one thing that I was doing was testing out earning strategies and trying to figure it out. And what I would do was go back the previous 4 to 5 earnings to see how much a certain stock, like Netflix or Google or whatever, moved on the prior earnings. Because I knew about the market maker move, but I also wanted to do some research on past earnings just in case. So I use a combination of the market maker move and prior moves to figure out what kind of strategy I'm going to put on for the upcoming earnings.
Mm-hmm. Mm-hmm. Now, to clarify some terms out there for people, most of you who listen to us are traders. Some of them are going to be brand new traders, so I just want to make sure we're on the same page with a few things. Earnings. To be a public company, you have to have public records. And now some traders will tell you that these companies constantly manipulate their records, but that's a different conversation for another time. Every 3 months or so, at the end of the quarter, within 30 days of their quarter ending, they have to report earnings. It might be 45. I actually don't know the SEC rules on that. But within, a short period of time, the company has to come in and report their earnings to the public. That's called an earnings report. Every trader knows about it. If you want to ask yourself, if you're a rookie still, ask yourself if you double check earnings every time you make a trade. Because if you don't, you're still a rookie, okay? Because there's no way that a veteran trader is going to get blindsided by not knowing when the corporate events are. Can it happen once in a blue moon, even to the most experienced trader? Sure, but it shouldn't. It's really simple to look it up, and it's really simple to kind of plan around it. Now, that being said, it's not just a one-day event, and this is what Brad is talking about, is trading it. It's actually, it kind of is the centerpiece in the entire story behind a company. You see, about 6 weeks in advance of earnings, people start to become aware of it. Now, whether it's 6 weeks or 4 weeks or 2 weeks will depend on the stock and the earnings season and the market cycle, but eventually, at some point, everybody starts to anticipate this event coming up. Actual prices start to get a little bit smoother. Volatility starts to build generally, naturally, and then at some point it will plateau. Then what happens, Brad, after that?
Sorry. Say it again.
What happens after the earnings is right there. We're going to have the event.
Oh, okay.
Volatility, implied volatility has risen, plateaued,
Right.
and then at the earnings date, what actually happens that we're watching?
Yeah, you get your vol crush, my favorite part. So all of that built up implied volatility just pretty much will go away the next day to, the next day or day and a half. But so that's usually what I play. But there's also, strategies building up to earnings where you can take advantage of the lift in IV, or after where you can, do different strategies as well. But I specialize in put the trade on 15, hour to 15 minutes before the earnings announcement, and then see what happens the next day.
Mm-hmm. Yeah, I'll tell you, from my perspective, I used to call this the George Costanza logic, is that if everybody else is doing it one way, I should do it the opposite. You guys Seinfeld fans?
I've seen some, definitely.
Certain
Yeah,
episodes.
there's one episode where Costanza's like, I will do the opposite. Since everything in my life has been a failure, I will do the opposite. In the entire episode, he like gets the girl, gets the job. It's funny. Like he tells his boss off so he gets a promotion. It's a Seinfeld. It's great. It's classic. But anyway, I used to use that line describing selling options into earnings. Because when you learn this stuff, one of the first warnings I ever got, Brad, and looking back on it, it's kind of a head scratcher. I had a very experienced old trader. He would tell me, don't ever hold through earnings at all. And I thought, well, why not? Somebody's got to be holding through. He says, well, if you're going to hold through, make sure you buy, don't sell. Now, after 10 years of trading, I know that advice to be 180 degrees wrong. It's absolutely backwards. And the reality is that a lot of professional traders and a lot of institutions, they sell options into earnings because they want to collect premium, and vol crush will help them build a profit. I don't want to drown people out there in terms, but the core is that there's a system in here that you can develop. And Brad, you've developed a system. How dialed in is it? Like, how rule-based is it, and how much do you have, like, certain minimums that you have to hit before you take a trade?
Right, yeah, I'm still working on that, but for the most part, like my iron condors and inverted butterflies are my go-to strategies, and those ones are fairly dialed in, where, I'll have to have, a certain delta for the iron condors, the short strikes, and try to get. I actually use your guys' roid fairly often because that helps out a lot, so everybody should start using that if you're not.
Yeah.
But yeah, it's getting dialed in to the point where I'm fairly consistent every earnings season, which is awesome.
Oh, I love it. Consistency is what traders are going for. I was just talking to, very, very well-known person over at Tackle Trading in the community, Steve Wong. I was on the phone with him before we jumped on the podcast today, and he said, Tim, when I was new, the very first thing I ever tried to do was just generate something consistent, even if it was just like $10, whatever. If I could make consistent money, that I knew I could grow it from there. And time decay and the volatility crush, in my opinion, are the two most predictable things in trading. So you're dialed in. I love where you're at. I got to tell you though, Brad, I've been teaching for a long time, and there are times I have to hesitate before I teach people how to trade vol crush. And you probably know why. What would your guess be? Like, think of a new trader.
My opinion would be that it's just so unpredictable. The IV, you don't really know exactly what it's going to do, and you can't. It's not the same with all of the other strategies that we do, where you can just put it on, analyze it and toss or whatever, and it's going to turn out the same every time. It's a little bit different sometimes.
It's also the management.
Yeah.
It's the emotions. If a new trader comes in and puts on too much on an earnings, and it's their first one, and the projected market maker move or derived from the straddle, whatever you want. I don't want to use too many terms to get people out there to turn the podcast off, because I think I might have somebody's head spinning out there in podcast land. Don't worry about it if that's you guys. If you're that listener right now, focus on the big picture stuff. But simply put, if they don't have the experience with it, and then they get into an earnings, and let's say the projected move was $10, and then they log in the next day and it moved $40,
Yeah.
they can lose their mind. They're like, they just don't have the context to know that that's just part of that random.
Yeah, if they're trying to put
outlier
an
that's
iron
gonna
condor
happen,
on
right?
Netflix or something, then they're probably not going to be very happy.
Right, right. Phil, I want to bring you back in here for a minute because you've interacted with a lot of new traders and you know the coaches at Tackle Trading, and have you noticed something that I believe to be true? Maybe you can comment on this. The different nature of traders' systems. I mean, it's pretty deep, right?
Oh, absolutely. They are as different as the traders themselves. Just as an example, Steve Wong with his Theta Fade system and he worked on perfecting that over the course of over 5 years, and that he came up with that. That was something that he noticed. There's this particular opportunity 1 day a week, provided it's not triple witching or anything like that. Sorry, I'm still throwing jargon around too. Triple witching is when options expire at the same time as a bunch of other market events happen as well. So people tend not to trade options on that day. As a clarification for everyone who didn't know what that was, but that for a more complex strategy, all the way down to people just learning covered calls or swing trading or focusing on Forex. There are so many strategies, and they can be mixed and matched too, provided it works for you and your trading rules you have in place for yourself. If you don't follow those, you're going to blow up your account and you will be a sad panda. But so long as it works for you, it doesn't really matter. And if other people trade it the same strategy as you and it works for them too, great. Because that doesn't matter either. The market, I did not realize how big the market was until I started here at Tackle Trading, and just how massive just the sheer volume of trades of a single stock like Google or Apple, let alone the entire market, is just so much. There's no harm in sharing with each other and making each other, like, helping each other get better.
Mm-hmm. Mm-hmm. Yeah, and honestly, I got to tell you, Phil, even being a trader that has as much experience as I do, over 10 years, I still know there's a depth to the market that even I don't get exposure to. At the institutional level or at the algorithmic level with these companies like Citadel and Goldman Sachs, I think there's stuff going on that would really boggle our minds, quite frankly. And then if you get it even past that to the international banking level and the things going on in the currency markets or with politics, it's a complex marketplace out there, which is why, Brad, a lot of people decide to ignore all that and focus on just what they can control and what they can measure. And that's kind of what you've done here is you've taken a lot of your training and you've said, okay, I'm going to specialize in this area. How many other areas did you try before you got to volatility and earnings?
I'd say I've tried just about everything that I can think of. I mean, I've watched probably thousands of webinars and videos on, what other people are trying, but one of the ones that just stuck out to me were earnings and how it's kind of, for me, I like shorter term earnings plays instead of making me wait a month or two after or something. So it's just kind of wham bam. If it worked, awesome.
Mm-hmm.
If it didn't, then I was okay with the risk going into it, and that's important.
Mm-hmm. Absolutely. Absolutely. And, guys, if you're listening out there to the Trading Justice podcast here, traders like Brad and myself and Phil, we're always on tackle trading, watching videos and putting stuff together. And there's a clubhouse over there. One of the things that we do every week is we do a coach's show as well to help you kind of understand where the market is and go get in the game over there. You can definitely come and join our community and join our club. The thing that I'm thinking about right now is with this earnings stuff, I want to boil down to some of the details and kind of, really get down to some of the nitty gritty here. How do you find a company to trade, Brad? Do you trade the same ones over and over, or do you scan?
Okay.
Kind of
Yeah, a
walk us
little
through
bit of
that
both.
process.
I do have my go-tos, which would be, well, unfortunately, Netflix is probably ousted due to that 7-for-1 split today. Not that I won't use it, it's just not going to be the same. Companies like Google, LinkedIn, Amazon is another favorite. So, I mean, those ones I'm always like, okay, there's going to be an opportunity here. I just have to figure out what strategy to do. Other times, I do have a scanner in TOS that will just scan every day for earnings with weeklies. Like companies that have weekly options, so they're more liquid, are typically the ones I'm looking for. So I'll scan with those companies in the next, week if they have an earnings, and then look that way and plan for it.
Now, you'll notice, guys, these are big names. If you're going to trade a strategy on a volatility event, you need liquid companies and liquid options. But if you're a trader out there and you're thinking about the names that you rattled off there, Brad, they're also a certain size of price, right?
Right.
What is it about bigger companies in price that makes them better for your system?
There's typically more implied volatility in general, and you can get a better credit for selling options around that earnings play, and then the vol crush is generally bigger.
Yeah. There's an instinct that I've seen out there by consumers that start trading, especially who've come from the background of stocks or just the way of thinking about value. There's a lot of people out there who, when you talk about a $100 company, they cringe and they're thinking, I can't afford that. But with spreads, it's controlled risk and also controlled cost. One thing that if you guys want to learn how to trade not only earnings but also options and spreads, make sure that you put the time into practicing first. You don't ever want to just jump in the live market and start trading short iron condors on earnings without practicing. And Brad, you've probably done quite a bit of virtual trading in your life. What advice can you give anybody out there listening in terms of how much time they need to spend there?
Definitely. I actually go by what you've said in the past. If you haven't done it 50 times or so in your virtual trading account, you don't really have any business doing it in a real account where you're risking your own money. So that would be, I would second your advice there.
Yeah. Yeah, absolutely. You got to practice, guys. I mean, you have to practice. If you're coming into this, and this ties it right back into the original, starting point here, reading Rich Dad, Poor Dad, becoming an investor, getting education, getting the right context, getting the right motivation. If you're coming into this to try to start a business that you're going to be a part of for the long haul, that you're going to be running for decades, possibly, it's not about going in and making money tomorrow. And that 50 times, by the way, that's per strategy. If you can't go in and put the practice in, then you're not ready for it. Guys, the money will be there if you can develop your skill. If you don't develop your skill, you will give your money to the market anyway. So patience as you're coming into it is probably a good thing. Now, you can always ask a mentor if you're ready, but my litmus test also is you should know you're ready. If you have the confidence to say, I know how to put the trade on, I know how to find the candidate, I know how to decide which one is better than another one, I know how to manage it, I know what to expect, and I've done it enough to know what my average results are going to be, then you're ready. Okay? And by the way, you don't need a lot of strategies. You just got to get started with one, and then maybe 2 or 4 or 5. Maybe if you're a trading nerd like me, Brad, you'll end up with the 50 or so that I use, but definitely not necessary, right?
Right. No. Yeah, I would say I have 3 go-to strategies for earnings, and then the rest is kind of like special situations, you know.
Yeah. Yeah.
But
So
that's kind of
what's your
why I built my spreadsheet to be able to back test, not just for a certain strategy in general, but for certain strategies on a specific stock. You can go back test and make sure you know which one is better probabilities for you.
Yeah. Yeah, there's no doubt about it. And you've got to continue to practice as well. You know, one important skill set in markets, guys, is to kind of get a feel for the current market conditions. And my best advice is to always stay active. There are times in your life where you want to go on vacation. Absolutely, take it. You're in control of your time, not anybody else. There are times in your life where maybe you just don't feel as confident. Just get back off, but stay in virtual. Then, you'll oscillate between live and virtual at times. But the spreadsheet, we've referenced it a few times. What does it do for you, Brad, to make your life easier?
All right, so back in the day when I was trying to analyze all these stocks, it just took forever to figure out what the typical gap or typical range was the day of earnings. So I basically just programmed an Excel sheet to be able to give me all of that information, including the biggest gap, smallest gap, average gap, and then the same metrics for one day, and then a week after earnings and a month after earnings, just for, depending on your strategy, you can use those in combination with the market maker move and dial it in that way, which
I think
is
it's really
nice.
cool. And by the way, before you guys start emailing me asking me for Brad's spreadsheet, it's not for you. It's Brad's. Okay, that's intellectual property. It's proprietary. So, the challenge here would be to think about what you would want in a tool yourself, and either start working on that or collaborate with other traders to help you with that. Because Brad, I think that something like that, when I first saw it, I just thought, man, this is powerful. Because and I gave you some advice. Definitely don't ever give it away, right?
Right. Yeah, but I do plan on posting some information on the tackle trading site Clubhouse for at least the big ones that I'm trading, so help you guys out that way.
You are a nice guy. Yeah. And I do believe in community and all that kind of stuff, but when it comes to one of my traders who worked their tail off to build something, I don't ever think they should just, give away work that took them years for nothing. I really do value intellectual property, and I think that anybody in a business like mine has to, because it takes time. I mean, think of all the years you put into developing the knowledge and the skill to ask the right questions, right? So
Right.
I was impressed with that spreadsheet, and it saves you time, doesn't it? It saves you a lot of time.
Yeah. Yeah, I can get all the numbers I need for, 5 to 10 stocks in a couple minutes rather than trying to spend hours analyzing every stock.
Yeah. Yeah, and that would be the challenge I'd have to those of you out there listening, is try to find ways to make your life easier, whether it's in organization or process. I mean, one thing I do all the time with a student or a new trader or an entrepreneur, which, by the way, Phil, say the word entrepreneur again.
Entrepreneur.
Man, you enunciate things so beautifully, Phil. I like it.
I went to school for 4 years to learn how to say that word for my degree, I'll have you know.
Yeah, I went to college for 7 years to try to not talk like the 19 years trained me beforehand, growing up in a small town. So, yeah, I didn't break all my bad habits. I can promise you that. Anyway, when I'm working with people, I ask them which of the steps are mandatory, which things can be automated, and what is your goal in terms of time? I think one of the challenges a lot of new traders have is they don't know how to manage their time, because there's so much clickbait out there, even in the marketplace, especially in the marketplace. You're going through the news and it says, Iran to strike nuclear deal. Oh, I gotta know about this. What is Obama doing? You click on it, you're 10 minutes later. And then Zero Hedge is citing numbers about how, JP Morgan or Goldman Sachs is really stealing billions from us. Oh, I gotta know about that. I gotta tweet that out. We're easily pulled away from what we're supposed to be working on, and that is making money. And so anytime somebody can develop a process, or whether it's a tool or a spreadsheet or just organization, that's something I'm always going to applaud. So I love that. Do you ever think? This is a question. Maybe we can get into some deeper stuff, more theory stuff. Do you ever think the market's going to catch up enough to where they accurately price volatility into earnings?
Oh man, I don't know. I like it the way it is, so I hope not.
I don't think so. I'll tell you why in a minute. Why do you think they overprice it now? Because we're talking about a market that's pretty dang smart. They got all kinds of computers. They've got quant-type mathematicians on Wall Street. Why do they overprice volatility on average, do you think?
There's just so many players in the market. I mean, even though they know a heck of a lot more than we do, they don't know everything. So, I mean, they got to have some kind of buffer there.
hmm hmm Yeah, and I also think there's even a different explanation to it, and that is that it's riskier to buy, but they know people have to buy. See, like a
Right.
hedge fund going into an earnings, they're probably going to buy the insurance the same reason why I buy home insurance, right? They have to protect an underlying assets that's worth a lot more than whatever my trade is. Wall Street, institutions. Insurance is generally bought, and I think there's just a little bit of fat on it, is really the way I'd describe it. A little fluff on it in terms of volatility, and that's why you can collect a premium. Yeah.
Makes sense.
Oh, what other areas of the market are you excited about learning, Brad? I mean, are you going to stay laser focused on earnings, or are you looking at other things to do?
I definitely dabble with some other stuff. I do love theta still, so I work on that. And my new thing that I've been learning more is forex. So really appreciating all that uh, Matt does out there for us on the site. It's been a real learning experience, so it's cool.
Yeah, yeah, I think it's pretty cool as well, actually. I mean, one of my first mentors, his name is Jeff Crystal, and he's a forex mentor, and he taught me about currency early on. But I never really took to it until a few years into my trading. Even after he taught me, I used the technical analysis, but I was always an options guy. I mean, I love options. I love the different spreads and the risk graphs and all the different Greeks. In fact, I always felt like the fact that they are more complex, because I'm pretty bright, I can go in there and do a better job than the average Joe. So that's one of the reasons I liked options. But the thing about Forex to me is that it is so tied to the future of what everything we're watching is going to do, that if you don't educate yourself on the future of the currency system and the dollar, I mean, you're going to find yourself without a lot of value in your money. I really worry. There's an event later in the year with the IMF where they're probably going to include the Chinese renminbi in some kind of SDR, right? Matt's talked about it a lot. I really worry about the dollar long term. Short term, it's looking pretty okay. Had a really good 2014. But learning, even if you don't trade currency, to at least be able to watch currencies so that you can do something about it if you see those breakdowns happening, I think is really important. Phil, what about you? I mean, you hear all these systems, all these different areas. What grabs your interest and your attention in terms of markets and some of the trends that we're moving into?
I do find currency fascinating because even at I do disagree with Matt saying it's the death of fiat currency. Even gold itself is a fiat currency. It's turtles all the way down, man. There's got to be at some point something where you just say, okay, yeah, this has value, and you all just agree to it. The black market trades tide, for crying out loud, for drugs and stuff. So Forex really interests me. I was fortunate to join Trading Justice and tackle trading just before the Swiss franc uncoupled from or unpinned from the euro and caused all sorts of panic and craziness. I remember that following Tuesday, every one of you, all four coaches, were gobsmacked, and it just as you were pulling up the charts, just that line cratering with the USD Swiss franc pair, just holy cow. what was the thought behind that, and just the effects that are still being felt today. I do find also a few international stocks in particular, because I'm a gamer, so there aren't too many actual publicly traded gaming companies. But the ones there are, I try and follow. And the main one, Games Workshop, from overseas, is slowly imploding because it's being run poorly.
Well, there is Activision, ATVI, yeah.
Oh,
Blizzard,
for video
right?
games, yeah, there's a ton of them.
Yeah. Yeah.
EA does surprisingly well for how much its customers hate it too. But at the end of the day, I hate this company, but I'm still going to spend money to buy the game. Rah!
Right.
The ultimate thing of you're allowed on Facebook, but ultimately your wallet says, yes, I'm going to buy Sims 4. So
Maybe you and I will have to do a podcast and not bore Brad on Brad may not be bored by this, by the way, but on the...
I'm a gamer.
Oh, yeah.
Well, let's talk about it now. Because, Phil, the death of fiat currency, I don't think fiat currency will ever go away in its entirety. But the current version of fiat currency, I think, is what you worry about. I mean, could it be that governments are willing to kill their current fiat to replace it with a new fiat just because they're trying to fleece average people? That would be my concern. I don't think the dollar's going away, but if the U.S. government's intentionally killing it because they know they're going to replace it with something new from a world reserve standpoint, I worry about the elite in this country who control banking systems and their true intentions, Phil. I don't know if they're always noble in that.
Okay. That there was a slight semantics misunderstanding on my part, because the government system as a whole I do trust, but you clarified and honed it in with specific people within the government and owning businesses might be acting maliciously. That I do agree with and would worry about, but largely I am a bit of an optimist in that regard of long term the government is to serve the people. It hasn't been on the national level as well as it could be, just because there is a blah man in the White House. Now,
first of all, when you say blah man, it sounds like you were saying black man, and I think I know you meant blah like boring, but you got it. That's funny. Oh.
I will clarify. Yes, BLAH. I will clarify for everyone. And Congress does not get along with him. So we've had a standstill for on national policy. Foreign policy's been crazy. We've reopened relations with Cuba. The six nation Iranian deal that just finished. So things are other ways are going all right, but
ding, ding, ding.
in terms of the elite, the plutocracy essentially, there's no predicting it's such a different mindset, because you get to a certain point where you want power, you crave power, and that kind of mentality already, or that kind of desired position already attracts a certain mindset. If you were to take a typical mid to large company CEO, you will likely find the following: they're old, they're rich, they're white, and they're tall, and they're probably sociopathic. And there have been studies, I can go and find them for people if they want, done on all of this, and sociopathy, it's rewarded in the corporate world because it's like, step on people to get ahead. Yeah, sure. So long as you either don't break laws or don't get caught breaking them. That's being cynical right there. But the all for me, none for you, I got mine is rewarded in the corporate world. and that total backstabbiness behavior, and those are the people that end up as CEOs and people in charge. And that's where I would get worried, definitely. Ultimately, I don't think the consumers would be, well, I will stop myself right there, actually.
Sociopathic, aristocratic, narcissistic demagogues, right? We'll call them sand people. They're going to be the sand people from now on. SAND.
Sorry on that rant. Apologies.
Oh, I like it. Well, the thing about it is, though, I've actually looked up, Matt and I early on, even before you became a part of the podcast, we did this one episode on narcissism. And we looked up the definition from the DSM-4 on narcissism. And to a point, like every person that you know in leadership has most of those characteristics.
Oh, yeah.
I was talking to one of my therapist friends about that, who actually, she's a therapist, and she says, yes, Tim, yeah, you probably are a narcissist, first of all, and she was making fun of me. But then she said, most of the characteristics of most of these things, we all have some of them in them. It's, does it dominate every component in your life and take you over? So whether we could actually give them the diagnosis of narcissist, I'm not sure. I've worked for a lot of good people that weren't. I've worked for a few people that were. Sociopath's a big one, big word right there. We could examine this further, but one of the things I was bringing up on this is the gaming. The reason I brought up gaming is World of Warcraft. I started playing World of Warcraft. In fact, I remember when I first installed Warcraft 1 and then Warcraft 2, and one of the coolest things I ever had in gaming experience is when I went down to my dad's office, and we used to dial up on the old dial-up modems in like 1997, 8, 9, whenever it was. And me and my brother, he would be down at home, and I'd be out up at the office, and we would play Warcraft 2 with each other over the computer.
Back in the day, that was the good stuff. Warcraft, Starcraft, all that good stuff.
Oh, yeah.
Very cool stuff.
Key.
Oh, what was the thing that the peons used to say? Strodel or something like that.
Dog. Work.
But the reason I bring it up is because then you introduce World of Warcraft, a massive multiplayer online role-playing game. And it's just one of the founders of it. There are many. There's so many that have become huge enterprises. You guys are probably more tied into gaming than I am right now. Getting old with kids, guys. But World of Warcraft, one thing that it did is it introduced an economy to it that I don't think gaming ever had before. And if it had, it didn't have it to the scale it did. The reason I think it's important, I want to get your take on this, is I think people of your generation and somewhat my generation, we grew up using digital currency. It just happened to be in gaming form. Now it's online through all of our banking. We're used to the idea of money just being digital, right?
I would agree with that.
True.
Yeah. So couldn't we just decide to use digital money that's not government backed? Would it be that big of a leap to a different way of thinking?
Well, where does it come from is the thing. That's one of the issues with Bitcoin. I think we will find a way there eventually, like the kinks will be worked out down the road. But one of the biggest things is, since there, a few things, and if either of you want to cut me off, let me just go ahead. But one of the things is who creates the currency in the first place. Bitcoin has taken off after some time, and it finally took off. It's now more a commodity than a currency. But the people who created the currency, like the Genesis block is what it's called. The people who made it just took huge handfuls for themselves, and it's just that that strikes me as that doesn't strike me as good. They created the math behind it or what have you for the security chains and everything. That's fine, but there's just something skeevy about that it almost feels like an MLM, if that makes sense. Like a really negative one where it's, hey everyone, buy into this thing with these stand bucks, and you can get these stand bucks from me, or you can mine and create more, and I'll just give myself a bunch of stand bucks to start with, but don't worry about that. Whereas with a government, it's an entity that's creating the currency, so the entity itself is spending it also on roads and infrastructure and blah 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 blah. And I've had this conversation with a few of my friends, just on and on and on and on, and that's the biggest thing for me. That how do you get beyond that part of it? Who gets to create it? And there does need to be some kind of safety check kind of thing. That one of the things that is preventing a Bitcoin exchange properly taking place is the exchanges don't have to follow the same regulations that, say, credit cards do. Visa and MasterCard came out and slammed the concept of, well, if there's a central body where it can be checked that this money isn't going toward terrorism and stuff, like we have to do, the value of it would drop because you have all these costs that now the currency has to account for, and whoever is running it. So
I have a lot to say on that, but I want to get Brad's take first.
I don't know that much about it, but what Phil's talking about makes a lot of sense in the multi-level marketing type of example. It is a little sketchy, but I've never used it personally, and I don't know a ton about it, so go ahead.
Well, let's examine what it actually is. Phil, you said it's a commodity. For some people it is. They mine it and hold it, hoping it's going to go up in value. Some economists have said it's 1,000 times more valuable in reality than what it currently is being traded for. So I understand why some people are holding on to it. It's a currency in a sense that you can use it to buy money, and then you can hold it and use more of it to buy more stuff, or buy more stuff, or buy services, or whatever it is. There are plenty of people who bought cars with Bitcoin, houses with Bitcoin, cup of coffee with Bitcoin. Down at the Pie Hole here in Salt Lake City, Utah, get a good thin slice of buy the slice pizza, New York style. You can pay for Bitcoin right at the register.
Can I buy a gallon of milk with Bitcoin?
You sure can, I'm sure. You can buy anything with Bitcoin.
Not at Smith's. I can't go to Smith's and buy something with Bitcoin. I can't go to Harmon's.
See, that's the thing. There are certain retailers, and this is the thing: is it currency or is it technology? Because I had a student in my office this week, and her livelihood is based on the fact that she owns 5 frozen yogurt stores, and they do a lot of volume. It's on the East Coast in the Virginia, D.C. area, and I was talking to her about Bitcoin just kind of off the hand. We were just at lunch or something. We were getting pizza right at that Pie Hole, and I said, "Oh yeah, you can pay for Bitcoin here." She says, "Well, why would they do that?" I said, "Well, because then they don't have to pay any transaction fees to the bank or Visa or whatever." She said, "Really?" I said, "Yeah." She says, "But then do I have to hold Bitcoin?" And I said, "No, no. Tiger Direct or PayPal or even eventually when Amazon takes it or whatever, Overstock.com, when they take Bitcoin, they don't hold Bitcoin. They instantly, through the use of technology, transfer it right back into the US dollar. You see, to me, Bitcoin is not about being a currency, even though it is a currency. I think it's the technology. It's not going to be hipsters that make Bitcoin relevant, guys. It's going to be billion-dollar businesses that make Bitcoin relevant. If a company can find a way to save $50 million in transaction fees by using technology, non-fiat based, guess what they will? They just will. They'll adopt it. Now, are they able to do that now? No. But that's the whole point of technology. I'm telling you, whether it's Bitcoin or some other version of a digital currency that's non-fiat based, it's going to be a part of our future.
What do you mean
Because
by
these
non-fiat based? Oh, no. You already answered that. Apologies.
Yeah.
Not backed by any government. It's just the value is just
Right.
kind of out there.
Right.
Okay.
And the thing about who did what, like what's the guy's name? Nakatomi, whatever.
Some mathematician, yeah.
Yeah. Actually, there's a lot of theories that he's not actually a real person. That it was created by corporations in Japan. I can't remember. I read something about
That's
it. Like
pretty
if you break down the
conspiracy
acronym.
theorish.
Yeah.
There's
And
always
people are
a
like,
conspiracy theorist.
that's right. And then you'll hear stories about the Silk Road, like, the fact that guy just went to prison because on the Silk Road they were buying and selling drugs with Bitcoin. All of that is subterfuge. It has nothing to do with the future of what Bitcoin is or isn't, quite frankly. It literally is meaningless. Because the reality is that I use my cell phone not because I know how it's built, just because it makes my life easier. If in the future a technology or an ability to transfer value is going to make people's life easier or save them money, they will use it, period. Whether it's Bitcoin or something else, I don't know. I think even within the Bitcoin community, the alt currency community, what you'll see is they debate about it all the time. Do we want an ETF? Do we want some regulation to come in and double check? Do we want some oversight? The people who want Bitcoin to grow now, they're usually like, yes, bring in Wall Street, bring in the government. Bring in all of these traditional groups. The people who are, little anarchists deep down in their heart, they're like, no, the reason why we created this in the first place is to keep those people out. I don't know what the answer is. I don't care. I'm fascinated by it. To me, it's just one of the most interesting things from an economic standpoint. And I honestly think it can be game-changing. Generationally, technology-wise, but also even outside of that, the fact that there are billions of people in this world that don't have access to money or a bank account in the way that you guys do, but they can get a phone and they can get to a way to transfer money. There are communities, I've read about a bunch of them, where like their currency systems imploded. There's one in Africa, I can't remember exactly what country it is, but the currency system completely imploded, and so you know what they started doing is trading points on their phone.
Yep. Minutes on their
value.
phone. Yep.
Yeah. I mean, I find that to be very, very interesting. Yeah.
Anything can be a currency.
Yeah. I don't know. But the reason I brought up World of Warcraft is, to me, I think anybody who's ever grown up with video game economy kind of is more willing to accept it. I think it might be generational a little bit as we see this change happen.
Yeah, I can agree with that. Definitely.
Oh, well, guys, we went long. That's okay. I like a good 70-minute podcast, Phil. I think it's about right.
Yep.
Brad, first of all, I want to say thank you for being here and sharing some of your wisdom and your experience with our community here. Thanks for letting me and Phil rant about Bitcoin.
Thanks for having me. It's been awesome.
Yeah. Any little bit of advice for new traders out there as we send them off?
I would just say don't be afraid of earnings. Just learn how to use it to your advantage and have fun with it. But be careful.
Phil, what do we got coming up down the pipe with tackle trading? What do people need to be looking at?
Well, tackle trading, we have Theta Fade just did a soft launch, and people are loving it. They're going through and learning. There are currently no spots available right now, but there will be in the near future. You can go to tackletrading.com/theta-fade to check that out. It is a once-a-week options strategy that Rich Dad Hall of Famer Steve Huang created over the course of several years, where it is traded only on options day on Friday, and it uses an options theta fade. It's the name is really descriptive, actually. You fade into earnings using theta and options, and it's a pretty cool system. We have more and more articles being typed by guests. We have Tyler Craig doing more and more articles, and his writing is fantastic. You'll be seeing more stuff from yours truly, speaking right now, Phil, And we also, for the podcast, we are on episode 98 right now. We are fast approaching episode number 100 of the Trading Justice podcast. So be sure to listen, keep your ears open for that. We're still working out what we're going to do, but it's going to be fun and it's going to be big. So those are the main things that I see on the horizon.
Awesome. Well, anyway, for the Trading Justice podcast, this has been Tim, Phil, and Brad here today, episode 98. Phil's right. We got to plan something real sexy for episode 100, and we'll come up with something. Maybe we'll do a live podcast. Ooh. You know, bring a bunch of guests in, let them rant. That might be fun. Maybe we'll do an all-star podcast. We'll bring in Dean and Steve and Brad and all the people who want to join and kind of have a big thing. We'll figure it out. Maybe me and Matt will just predict the NFL season. I don't know. That might be fun.
Back to the old days.
Yeah. All right, guys. Get in the game. Go over to tackletrading.com. Become a part of our community, and we'll see you over there. Peace. I'm out. See you guys.
See ya.
Later.
You've been listening to the Trading Justice podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice podcast is proudly sponsored by tackletrading.com. Get off the sidelines and get in the game.